Good morning, everyone, and welcome to the Morning Edge. As I mentioned yesterday, in case some of y'all might have missed it or were out for the holiday, Blake took a trip with his family to Disney World. So he was out yesterday and he's out today. I think he's returned back, but he was going to be returning back very late in the evening, and it was going to be pretty tough for him to get up in the morning. So here we are, and Blake will be back tomorrow, but I'll be covering for him today. We're actually taking a look at the E-minis. And the market's gone and pulled back. A lot of people were pointing out over the weekend that 2013 was the 61%, which obviously was correct, of this bigger move here. And we'll go on and pull this back out. Of 1831 all the way up here, which was, I believe it was 2126. We'd measured that off. But I also mentioned that we had this huge bias pivot. This is all the way back since January. And I thought maybe the market could go in and make a move up towards this 18, and it still might. But we did go in and pull back from this 2013 to 61%. Not a whole lot, but we did pull back. Once we get things going again, now that the bond market, U.S. bond market, is back to being open, and you got more of the players in. Once again, I think that the key area is going to be this 1875, which was the old bias pivot from back in early in the year, back in January. And I remember the market, as I mentioned yesterday, the market was trading. It would go to this bias pivot, 1875, and it would fade back to 1992. Then we get back above 2006. I have these marked out from way back when. And then once we got above 1875, we'd make a run to 2038, and then we'd run out of gas and find support at 1875. And then when it lost 1875, down the chimney we went to 2006, and then testing 20. So I think that we will go and make that move up here to 1875. We'll probably run out of gas somewhere between 1875 and 2250, which is, you can see right here. From there, we'll probably be able to go and work a little bit lower. How much lower? What's going to be key on the way down is this 86.25. If we can make it up here, which I would expect us to make it up here to 2019, between 2019 and 2022. On the pullback from there is going to be key is this 86.25 coming right across. You can see that here. I mean, there's some additional support here ahead of that at 92.25, but I'd put a little bit more stop into 86.25. That would allow them to take out this 92.25, overshoot a little bit, and dip in here to this 86.25. But I still like a move up here to 2019, between 2019 to 2022 and a half, before we look for the market to go and run out of gas and pull back. This pullback is slight, but it is key in the sense that, like I said, that 2013 is at 61%. A lot of people are spotting that over the weekend, from 1831 to 2126. Kevin was asking about a bias. I'm not sure if he means what the bias overall. Kevin says, I've done a lot of work with pivots and never heard of a bias pivot. Oh, what is a bias pivot? Around signed that nuclear deal, so oil fell. Okay. Well, there's always all kinds of reasons why they point out. Okay, here's a great point. Yeah, I'm glad you asked that. The bias pivot really is just my own lingo, and I'll tell you where we'll focus. It's a little bit more clear. Is on the euro dollar. Now, Yeah, there are. I've never really used bias, not bias, pivots the way some people do. I know, like way back in the old days on the floor, what they do is they would take the high of the day and the low of the day, and then I think you add them up, and then you divide them by 3, and that gives you the low pivot, the high pivot. I don't use it like that. Okay, here's what I do when I come up with the bias pivot. I'm looking at the most touches. And whether it's going to be on a 2-hour or a 30-minute chart, I don't look at something like a 5-minute. Well, you could, but where it turns the direction of the market on that time frame, whether it be 2-hour or 30-minute. One of the key things that we had talked about in the euro when we kept talking about 1283, and I've been talking about 1283 as a bias pivot for quite some time. And you can see here that we made this run up here. And on the bias pivots, I usually put them in red and in dashes. And there's not always a bias pivot. We talked about the bias pivot. We did really well in the dollar CAD. Now, I'll pull that up as a real quick example because I actually have that marked off with the lettering bias. And we'll spend some time on that since you mentioned it. Because like I said, we already covered 1 hour in the European crossover. I've got, Blake's going to be out, so I'm going to be covering today's show. So we have a lot of time on our hands. So let's go and switch into the dollar CAD, the 30-minute, and we'll cover a little bit more in what you're asking, which is a good question regarding what I like to call a bias pivot. So we're going into this quickly. And you can see here I have this marked up. I say it's the bias pivot, okay? We were using this pretty hot and heavy. I think it was back in August, and we'll go back in here. And this is what I meant for me was the bias pivot, okay? Go in here. This goes all the way back to August, okay? So every time we would come up to, at the time was this bias pivot, 3173, the market would get turned away. You can see it all the way back up here to early August. Come up here, get turned away. Come up here, get turned away. And when we finally got above it, the market started taking off. And when we came back, it ended up being support. Now you might argue, well, you know what, that's no different from a support and resistance. Well, it is a difference because, I mean, you can look at this in retrospect and say, well, that was just a good support line. And now a lot of people have referenced 3173 as that's a weekly level. You know what, nobody was talking about 3173 as a weekly level back then. But what I was saying is that when it hits this level, and the idea is that it continually hits this level, and if it's above that level, the bias is bullish. If it's below that level, the bias is bearish. Now, obviously, we hit some other lines here. You can see where it was resistance, it became support. But look how many times that this 3173 kept getting hit. See, support, support. We dip below it, and even if the move doesn't stay too far, once you get below it, the market starts to go in and take off. We saw some pretty good battle zone here when we got back above the 3183. On the way back down, the same thing, and we're looking, like I said, this is 30-minute, so we're looking at the actual close, not because it overshoots it. The key thing is going to be the close. So you can see here that we bounced off it, we bounced again, and each time you would come down here to this area, it was more key than just simply a support level that you bounced through. But once you got below it, the bias turned negatively. You see what I'm saying? And not only that, you might mention, well, that's true of any good resistance or support level. But the key thing is that it immediately turns negative once it gets below it. And if it gets back above it, it immediately turns positive. And it keeps going back and forth. That's what I refer to as the bias pivot level. So you can see how I kept hitting it back here, hitting it, support, support. We come up here, we have a battle, and once we get below it, you're saying, well, that's just a support level, no big deal. It broke through it. Yeah, but look, as it comes back in, it follows through, and the follow through is pretty strong. Once we get above it, above that level, look what happens. We come back up. Once again, it's more than just a simple strong resistance or strong support because it swings the bias of the market in a completely diametrically opposite position. In the sense of, I mean, it's kind of like two words sound almost the same. What I'm saying is one moment we're below 31.73 and everything looks like it's going to hell in a handbasket. Next day we're above 32.73 and it's blue skies and the birds are chirping all over the place and everything's hunky-dory. That's how I use a bias pivot. And I use it as to how many touches it's received here. You see what I'm saying? So we're going to move back into the euro dollar. And we saw the same thing happen here with the 1283. And this is what, this leads into perfectly why I mentioned last week about what happened going into the FOMC minutes, what happened exactly right after the FOMC minutes, and when I say right after, I mean right after the release, and then subsequently on Friday. Now this 1283 here, and once again, we're just trying to give a little explanation on this, what I like to refer to as a bias pivot. You can see how it was, turned the market away here. And once we got above, we made a return trip back to 1283. The market stalled. And once it got past 1283, the market turns incredibly bullish. Now that, like I said, you could say, well, you know what, when we got above, let's say 110.50, the market gets bullish. But yes, but does it get exceptionally bearish when you get below it? And then back above it, it gets exceptionally bullish. And then back below it, exceptionally bearish. That's what I define as a bias pivot. So you can see now we were here at the 1283, and the market gets turned away. And this further back here, but like I said, I'm trying to keep this on target, on topic, instead of trying to keep going further back. But you can see it sells off. Okay, so now, and it was challenged well before that. So we come up here to the 1283 here, and you can see that the market. Make it a little bit easier to see. The market runs into a little bit of trouble, stalls for a bit, and then once we get above 1283, it's blue skies. Now, obviously, the whole idea was, well, that was on the backdrop of the yuan debacle, Chinese yuan debacle. Okay, fine. So we come to 1283, and now it's support. Okay. Once we get above 1280, once we get below 1283. It quickly starts to push back. We come back to 1283 and we get knocked back and we take out those lows. Pretty decent amount. We come back to 1283 and don't forget, it's all really about the closes. You can see here that we got, and I wouldn't really call it a shooting star. We have rallied, but it wasn't like after a long rally, okay? So the market quickly just turned away. Once we get above this 1283, it looks like maybe we got something here, right? But once we get that failure, it falls quickly right back, okay? So we kept talking about this 1283 because the market had been challenging it. Once we got back above the 1283, the market took off. It quickly ran out of gas. And once we lost 1283, it quickly accelerated down. They didn't find any more sellers. We got back above 1283, and it was blue skies all the way back up to 1455. We came back to 1283, it's support. And then as soon as we lose 1283, it's to hell in a handbasket. Everything's going to hell in a handbasket, okay? Then we make another run above 1283. I remember this well because this was, like 2 Fridays ago. And we got a close above 1283, and I remember marking, I go, because the market was quickly start losing, I said, hey, look, this isn't good if we get this close below 1283. And this is where the market sold off pretty hard on that Friday. So we quickly, no sooner we lose this 1283, everything turns all bearish. The bias turns bearish. We make another run to the 1283, we can't do anything with it. Now, that's fast forward us now going into the FOMC minutes. We got this close coming into this 1283, and we got a positive close here. But we quickly lost it, and the market, once again, lost it and started going south of the border. Okay? Now, as we came into the FOMC minutes, which is right up in here, the market actually, and I remember talking about it that morning, we got a positive close above 1283, but I said, subjectively, I don't believe in it because we did get a consecutive close. But I said, you know, it's thin because of the FOMC. I really don't believe in this market, and we, you know, ultimately we ended up losing it. Okay, but we did go in and get we did go in and get the FOMC minutes. We got this big old rally at the time, and I spent a lot of time on Friday talking about this. I believe I was talking about this was because I was short the market. And I had actually covered right before the FOMC, but I still had another position. I think that was 1275. And so I re-added the short on that I exited out right at a couple of seconds, but literally I think 5 seconds before the FOMC release. I added that back on 1296, and then I added again, I think it was like 1320, I covered 08, added back on at 1322, and then I ended up covering at 13 even, and then I had another one in there, and I keep forgetting what the number was, but I had the one at 1296. I covered at 1283. I still had the 1275 here, and I was putting in the limit at 1264. And the reason I explained on Friday, I said, you know, there's probably people saying, well, that didn't make a whole lot of sense. If you were short from 1320, you know, if you got short up here, why didn't you just, you know, why didn't you just go and hold it all the way down to 1264? Or just hold it all the way to 1283. That didn't make any sense. I mean, you know, you made money, but you left a lot on the table. I mean, you got, well, I mean, like I said, I got out at 1320 at 1308. I got short again at 13, I think it was 21, I think it was. And actually, I did scalp a couple times right in here for just a small amount. But anyway, I got here, get at 1320, and I wrote that down. I got out at even. And like, well, why are we going to go and do that? Why don't you just wait till 1283? The thing is because 1283 was a bias pivot, and I knew I was on the wrong side of the market at that point. When I say the wrong side, because the market was above that 1283 bias pivot, and it's bullish at that point. And so I had already said, you know, I'm already short. If it gets too higher, I'm going to have to bail because I'm on the wrong side of the market. I have to, you know, I can't deny the fact we're above 1283. And I addressed this yesterday was, you know, I can't be saying 1283 is a bias pivot and making a big deal because I was bearish euro, making a big deal when the euro is below the bias pivot and talking about it all being bearish, and then when it's above it, I act like it doesn't count. So on the way down, I kept covering here, and like I said, the 1296, which I had before, and then I added back on at that same number right after the release, I ended up getting out of that right here. I think it was 1283, I think it was. But like I said, I'd already scalped quite a bit. And then the last of it, which was the short from 1275, I had a limit at 1264. Once we lost 1283, and one of the guys was saying, I mentioned that on Friday, the guy said, wow, you know, lost 1283. And I said, he goes, that's really bearish. And I go, you know, you would think, but these Euro bulls just keep coming back. This is my concern on Friday, and when I was talking about the aftermath of that trade, was that when we got above here, we actually on this 2-hour close at 1321, I think it is, it took out the NFP highs, which were at the time were 1318, and I thought that was very significant. And then we kept going here, and then people were selling the euro up in here, the 1320s, the 1330s, and I thought they were crazy because the market had the momentum. It was also a Friday. We were above the bias pivot. And so that's why, like I said, I like to refer to it as a bias pivot, is because not every pair I look at has a bias pivot. I guess if I look hard enough, I could see one. But I'm saying is you are correct. With most pivots, you want to they add the high, the low, and divided by 3 or whatever, and then you take the, I think you take the low from that, and you take it from the high or something like that. I never cared for the way they did those pivots, but this is my own thing as far as touches, and I thought that it's a bias as opposed to a level like, well, how about 1335? Well, yeah, but does the market accelerate like a rocket on the way up, and then accelerate like a missile going south on the way down, and then keep doing the same thing over again? that tells me that it's a bias pivot. So that's what we have here. So it was a good question, though. Very good question. Yeah, Kevin says, thanks, Paulie. I totally get what you are saying, and to the extent it changes the directional bias, have you done any studies as to what the standard deviations in terms of number of pips or number of candles it travels before return to the bias pivot? No, I haven't, and I think, and that's an excellent question, because here's one area here. Let me take a look at this here. Because we, technically, well, okay, here's a perfect example here. In a sense, like a failure. We got above the bias pivot, but we quickly closed below the bias pivot, obviously, which turns it south. But the whole idea with the bias pivot is you don't necessarily, just the same way I use my exponential moving averages. And to be honest with you, I don't use them as much as I should to my detriment. But I don't automatically say, okay, it's above it, buy like crazy. Because if that was the case, then I should have been buying like crazy when we were in the FOMC. And I was actually on the opposite side of the market. I was short the market. But I thought that the market was going to go on and come back. But what I did do, which helped me during the FOMC release, and I was short the market, and we were, making this run up here. And we got all the way up to, was it here, the 1320 area, whatever. I guess it was right here, is that it told me you're above the bias pivot, you have to respect that. And I guess that's how the way I use it. I may end up ultimately going with the market the same way I am now. Even though I'm not crazy about the euro, I respect the fact that the euro is up here. And actually, I tried to buy it today, and I had a limit at 1340, just under 1342, and I just didn't get filled. And I noted yesterday that I thought that's where they're going to try and defend it. I thought that they could overshoot it and take it down to about 1338, and I didn't get filled. But what it does do is I end up respecting that the market's higher. But I don't really focus any time on. I'll give you an example, and I said that this was very subjective on Friday. Was it not Friday, but on Thursday before the FOMC release? And the market was here in the European session. And then I said, one thing that the euro has not been able to do, and this is on a 2-hour, I go with this bias pivot. We have not seen a consecutive close, consecutive positive close. I go, each one keeps falling and failing. Okay, here's a positive close and we fail. Here's a positive close and we fail. And there's others behind here. So that Thursday, we got the close above the bias pivot, and even though this looked weak, kind of like a graveyard doji, I said it's still above 1283. You can't say it's one way and then when you don't like it, you say it's not the other way. So on that Thursday, I said subjectively, I don't believe in this. I know it's above 1283, and I said that on the webinar, but subjectively, I don't believe in this cycle. And we ultimately did see the market going back down. But the only reason I was saying subjectively is because it was going to the FOMC that just weren't as many players, and so they could do what they want in this market, and why I didn't believe in it. But once we got into the FOMC and the release of the news was out, I had to respect price, and price was above the bias pivot, and that's why all on the way down I was covering and covering and covering, as opposed to when I was selling it up here twice at 1320. Why I didn't just ride it all the way back down here. I'm like, you know what? I'm on the wrong side of the tracks to start with. I need to manage this position and respect that we're above the 1283. But no, I haven't done any technical work along those lines. So we're going to move into the other markets, but that was an excellent question, and I thought it was key to go on and review that. As I said, getting back to the S&Ps, I think, like I said, obviously yesterday was a bank holiday, and other people have pointed out over the weekend that this 2013, and they did really well. I just didn't pay that much attention to it, but I did see that. Several people noted that. 2013 is a 61% of 1831, this swing low, we know that, to this swing high right up here, which is 2126. See, swing high from this low down here to the swing low here, and 2013 was 61%. Now, what I was saying is this 1875 is it goes back to what I was saying was a bias pivot. I remember from back in the middle of January, and the market would just vacillate on either side of 1875. And when it got above 1875, the market would take off, and it generally would run out of gas around 38 3/4, and then it would come back down to 1875 and it bounce off of 1875. Then on the way back down to 1875, if it lost 1875, then we were going right back down here to 2006. And sometimes we'd get below. I remember being below here at this 92 1/4 back then. And I remember saying, oh, I think the market, I have an excellent memory. I remember the market closed at, we had a run. We got up here and we got above 2,000, I think. And then we closed the day on a flurry at 2011 and like 3/4. And I said that the market would run out of gas up here. We would come up to 1875. And I actually paused a little bit at 15. You'd be surprised how often these levels hold up. And it made it there, and then it came back down to 2006, and then it launched up. But the key thing is the bias. Once it got above 1875, it would take off. I don't see that happening this time. I think all we're going to do is just overshoot it a little bit, and then we would run out of gas around this 2250. Now, obviously, if we come into an economic release, they could really do some damage. But we haven't pulled back that far. I think the key is going to be 86 1/4 here. So let's go now. Going back in the bias pivot, we can actually take a look at another market, and we can keep doing the analysis here. Now, the bias pivot has been in the crude oil market for me has been 44.92. Now, you can see here that we've had some wild swings through 44.92. And I've had to use the bias pivot in crude a little bit differently. But then, like I said, we had this huge drop, and then the market didn't know what it wanted to do. But the thing is once it got above 44.92, it was off to the races. And when we got below 44.92, we usually saw a pretty nice follow through all the way back. And once we got back above 44.92, it was off to the races. It's a little bit differently than what you were seeing in the Eurodollar, because crude had been so volatile. But crude is volatile for a good reason, because we had knocked so many players out of the market on this fall from up here. And this is just from $61, but we really knocked some people really out of the market, pretty doggone well. But we vacillated on either side of 44.92. But one thing about 44.92, using the bias pivot here in crude oil, well, you knew at that point you just go in that direction. You don't even ask any questions for the most part. You see what I'm saying? Obviously, you look at some other indicators, see if there's a fib, is it breaking a fib? But once you lose that 44.92, usually it was like Katie bar the door. You know what I mean? Takes off. You come back up, and then if you got past 44.92, especially you can see right here, we got would be like similar like a hammer bottom, and then the market rested on 44.92. Once you got that move up, you had to go with it, and it took off. So this was a different way in the sense that it was using the bias pivot, and also obviously use the bias pivot as a support area. We did see that here. But once you pop up off this bias pivot or go south, usually you saw pretty good moves in that direction. This is part of the reason why I expected the market to get above $50, because we were holding so much at 44.92. And if you remember at that time, we kept selling it up against this 46.40. And then even when it took off, we said the worst it'll make it up here is 47.29. I remember this market taking off up in here. It ran out of gas before we made it to 47.29. At this point, you could just feel that the market wanted to really explode and take off. And I said the next key area was 48.66. But ultimately, it looked like we were going above 50. And we did make it above 50. And we came into this key level here, 50.67, which we were looking for since early last week. And we got on Friday. And that was confluencing with the 78%, which is 37.75 to this high here, 53.91. When I saw those two things confluence, and then the idea that we got above $50 and stopped a lot of people, that's why I felt that we'd make it down to 47.29. Obviously, we overshot that, and I thought the earliest we would have got to 47.29 was on Wednesday, and probably not till Thursday. And lo and behold, we do it all in one day. essentially. So I was exceptionally surprised, but like I said, that's crude for you. It always surprises you. On the downside, I guess we can go and take a look at a fib here. And we're going to take a break. It's time for a break now. And we'll take a look at the 30-minute and see where we stand on the crude also. So we come right in here into the 61%. You see that? And we have a nice bounce. So let's go and move this here. And this is one of the things I like about crude oil, because technically it trades so well. As I told you, I was up pretty late last night. I actually didn't go to bed till 6:30 in the morning London time. So still catching up on a few things here. This is 43.97. But yeah, crude trades fantastically from a technicals perspective. I don't use all that other stuff that other people use. They use the to determine the volume and all that. I mean, they make money on that. You can't knock it. I just keep it simple. I use the levels and the fibs. The levels and the fibs. And you can see this nice rundown here at 46.63 is a 61% and 46.60 is a low. And we always talk about how when you fall back into a zone, more often than not, the market likes to go 50% into the zone. 50% into the zone would have probably taken us around 46.76, 46.75. So that's what I was saying is I thought the dollar CAD could go on and ease back as we start to pull back here and find support into crude oil. But let's go on and take a break, and then what we'll do is when we come back, we'll focus a little bit more time on crude, and we'll look at the 30-minute in the crude, and we'll spend a little bit more time on that. So let's go and take a break.